Hey, and welcome, and thank you for joining me again for another video. Today's a little bit different. I'm going to give you a complete insight into how I break down my watch list, how I break down my pairs for the week ahead, and also during the week, how I continually keep reassessing what's ready, what's optimal, and what also isn't, and what we need to be hands off with. And a lot of the time, being great traders is about obviously mitigating our downside, being great risk managers, and being great decision makers. And a lot of the time we should be sitting on our hands, watching, patient, and then we execute and pull the trigger when that optimal criteria is met. So really good insight for you guys today who are looking to double down on a very trustworthy strategy. As you all know, I call every single trade live and always have done. I do this for full transparency to prove I am who I say I am, that the strategy is brilliant, that I have a proven edge over the last 11 years, and what is truly, truly possible as a retail professional trader. So without further ado, let's get cracking. So guys, we will start from top down as we always do, and this is what I do to this absolute day. So as you can see from my watch list, we have the corresponding index first and then the corresponding pairs. We then have the British pound index and the corresponding pound pairs that I trade, the JPY basket, and then obviously the yen pairs, and then commodities at the bottom. Bitcoin I keep at the bottom as a crypto, but I don't necessarily trade it. So you can see then if we formulate our bias first on the higher timeframes on the index, that then gives us really clear direction of where we're looking to go. So if we go to a little bit of random data, okay, so we can just be dropped in. Let's go for the last few years still, so it's fairly current. Let's go to May, and we'll go at the start of that, or the second week. Cool. So let's get cracking. So the weekly, as we can see, we are very, very clearly bearish. This popped in our most recent bearish leg here. We took out obviously these weekly lows as well there. So with that body close there on that April weekly close. So nothing more to say than that. We are bearish and we are to treat this as the most recent bearish leg. And that is what we're currently interested in if we just measure the range of that leg. And typically I'll have the 50%, the 61.8 and the 786 on. That's all we really need to know. We're bearish and we know what leg we are working off, okay? That is it, okay? So we would then drop to the daily. And people think, is that it? And I say, yes, that's all you need to know on the weekly. On the daily, again, we'd actually, if we pull you apart here slightly, we were swinging bearish, okay, here. Now, this is our most recent bearish RSP. This broke out, so we're technically turned bullish on the daily, but when we mark then our most recent bullish RSP, which formulates there as that higher low, before we put in a new higher high, you can see again that daily close, body close below it. So we are again officially bearish, and this is our most recent bearish leg. And I will fib it. Let's hope that this is the bottom of the leg and that we start to have a pullback. But again, the daily is bearish, okay? Nothing more to say. Now, we've already had one attempt into sort of 10200 region, so I need to bear that in mind. But again, the daily is bearish overall, all right? And the 4 hour at the moment, very clear. If we just slightly look to our left, all this data is irrelevant. This is our most recent bearish leg here. We have, again, if I measure that range of that leg, okay, we did come into the 382, as you can see there. So it is a valid lower high and a valid pullback this. But then as you can see here, we failed to put in any new lower lows, but we've also not then broken above that lower high. So we are stuck in a 4 hour range at the moment, but we are still officially bearish, okay? So we are bearish on all higher timeframes, and that is what matters with the index, okay? We're also aware that we're potentially at the bottom of a daily leg. We're potentially at the bottom of a weekly leg, and we're starting to have that weekly pullback. So it doesn't mean we're looking for imminent US dollar trading, but it means we're aware that the index might have a pullback to allow the individual pairs to pull back before we can then take advantage of that synchronicity and timing, okay? So that will then lead us on to, the pound pairs, okay? So we know we're looking for, obviously the DXY was very, very much bearish. So we know we're looking for GU, for example, to be bullish. Of course we are, because of that synchronicity. So weekly, very much bullish. This here is one big weekly leg. There is no body, in terms of body swinging price action, in terms of proper higher lows, like you would see here, for example. So that is one big bullish leg, and we're still bullish. And notice how that DXY weekly candle was pulling up. Similar to this, the GU weekly candle currently is pulling down. The synchronicity is beautiful, but the weekly is bullish as we'd like. Daily, very cleanly bullish, okay? This was our most recent higher low here. We've now gone into putting new higher highs. So we can just about, what we'll do is we'll just check if that prior bullish leg, so that prior bullish leg here came into the lovely 618, and then we ended up going to the fib extensions beautifully. So that can be deleted, and we can work off this now as the most recent bullish leg, which is a hell of a lot more trustworthy. And we've got prior daily structure aligning with the 50%, 125.50, you know, a good fair few trustworthy confidences already just on the daily alone. So I'll take the 786 off. So again, we know where we are in the DXY. We know we could have a bit of a pullback into that daily region up here, which would make a lovely lower high before then obviously coming lower. Look, that fits beautifully within that sort of 50% and 618 range. Before then obviously we'd look to see something like that happen overall, okay? Now remember, this is all backed by macros as well. So we are aware of the macro bias, and then we're looking to align the higher timeframes, as I'm currently showing you, with that said bias, okay? So GU, very bullish on the daily, lovely clean bullish leg as well. And the 4 hour at the moment, this is the most recent 4 hour bullish leg there. So there's two possible scenarios here with GU that I'd be looking at for the week ahead. I'd first see if we had a reaction from here in terms of entry criteria. Now, if you're not sure of my entry criteria, there's another video I'll pop up on the screen now where I've done a free masterclass. Go and check that out. So first of all, we would see if price does pull back that we want it to, with correlated with that DXY pullback, would price give us the entry criteria here? Would we see that 4 hour wicking, exhaustion and slowing, blah, 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 all that good stuff? If we do, then we can look to take this as a bit of a 4 hour position potentially and ride it into overall daily fib extensions, which is where the 4 hour fib extensions align beautifully with as well. So that would be play option number one. The other option would be is that we come in for that deeper daily pullback into around that 125.50 region as well. And that would be the more favorable, because that would give us a better higher time frame pullback. Higher time frame is obviously more trustworthy. The lower you go, the less trustworthy. Yes, price is fractal, but yes, it's fractal, but confidences are way less trustworthy, okay? So I only use fibs on the 4 hour daily and weekly. I only use structure and price on the 4 hour daily and weekly. Entries is reserved purely for 30-minute and 1 hour, depending on the type of position that it is. So that will be our daily area of interest that we're looking at for the week ahead. So we go into EU. So we know the bias on the Dixie. So EU on the weekly should be bullish. Yes, it is. This is the weekly leg we're interested in. We don't care about any of this back here. This is the weekly leg we're interested in. And at the moment, we are going full steam ahead to around the 50% and the 618 at 10800. Beautiful round cycle number, okay? So weekly's bullish, good, in sync. Now, the daily, interestingly enough, the daily, this is our most recent daily bullish leg here. Now, the daily is still bullish. If we just measure that range, we're still above the 786 and we're still above the most recent bullish RSP. So as long as we stay above those two conferences, the 786 and the RSP, which is there, the most recent higher low before the higher high, then we're valid and we should continue to treat this as bullish. We've got the Dixie in our favor as well, which is bearish, hence sending EU typically higher. So the daily's bullish as well, still in sync. And the 4 hour now, the 4 hour was bullish. This was the higher low. Now, this candle here broke that higher low. So the 4 hour is technically bearish right now, and the bearish RSP would sit there, the lower high, before we go into the lower low. So if we were to pop above here and body close on the 4 hour, then I would be interested. But right now I wouldn't be. And we're conscious of that Dixie pullback as well, don't forget. So we'd pop back into here, and then maybe we could look for then long something like that. But until that happened, EU I'd be staying away from, because the 4 hour is slightly subtly out of sync, okay? We'd want to see that daily candle flip and look a lot better in terms of pushing for the upside, okay? But still nearly valid, but we'd wait for the 4 hour, okay? So Aussie dollar, again, we're looking for it to be bullish. As you can see, the weekly was bearish here. We've had a bit of a weekly engulfing here, and we have failed to break below 65, 75 basically for how many weeks? God knows, 3, 6, 9 weeks basically, 2 months. But I would be conscious because this is not swinging beautifully bullish yet. So AU compared to something like GU that we've covered, I wouldn't necessarily be interested in because it's not as clean. Now the daily has broken out now, and you best believe the 4 hours bullish as well. Yes, it is. But I wouldn't touch this compared to the other pairs we've covered, because the weekly is Now, if that weekly candle flips and we're trading back up here, then it's a different story. But it isn't at the moment based on what we're doing and the price and the data and the range that we're in. So AU, we're looking for upside, and I imagine it would pull to the upside as long as the DXY keeps selling off, but it's something I wouldn't be looking at for the week ahead until we saw more price, okay? So it helps you distinguish between what's good and what's not in terms of valid. So Kiwi dollar, again, weekly. This was the weekly bearish RSP here, you could argue. Weak bearish leg, lower high, subtly put a new, well, not new lower lows, we failed to, but this weekly close here broke that lower high. So we're now bullish, although this weekly candle obviously doesn't look great at the moment. We are technically bullish. The daily, again, we've had a lovely breakout, we're not surprised to see. And the 4 hour, again, is just, the 4 hours ranging a little bit. Got a nice clean bullish leg here, put in new highs there, and we body closed below that higher low. So a little bit iffy as well at the time of obviously this price and recording. So again, I would want to see a little bit more. I'd want to see the 4 hour, where's it gone? I'd want to see the 4 hour break out here, breaking these new highs, and then we can maybe drop to the 1 hour to look for sort of some swinging higher low, something like that, okay? But again, for now, compared to something like GU that we saw earlier, we know we're looking for upside on this, but we want to be buying from higher lows. And as you can see, the daily's very extended as we speak. US dollar Swissy, again, we're expecting to be bearish because of the Dixie being bearish, okay? So US dollar Swissy, we expect to sell off because of Swiss franc strength. Weekly is very bearish, as you can see, nothing more to say. The daily, this is our most recent daily leg that we are within. From there, from the lower high to the lower low. Currently tapped into 89.50 and had a lovely exhaustion. That's really good to see. And the 4 hour is technically bullish at the moment. We were bearish, this was the lower high. Failed to put in new lower lows, and then we've broken out of that bearish RSP. So we would need to see the 4 hour start swinging bearishly again, and we could take advantage of there before we look for that. So the 4 hour needs to get back in sync first, and then we can look at taking advantage. But the daily is very, very clean. So that will be something, again, anticipating a bit of a Dixie pullback. That may push slightly higher again before then selling off. So that would be what I'd be thinking or what I'd be looking for, but price has to show me that first before I pull any triggers, okay? US dollar CAD, again, we would expect to be bearish based on how the Dixie is. And at this point in time, if we measure that weekly leg, the 786 has been broken. The RSP not quite, but the 786 has been broken. So this would be making me think, are we going to come lower? But obviously, again, this weekly current candle is not the best. But the daily is bearish. 4 hour must be bearish. Yes. So again, we would just need to see the weekly look a little bit better. So it'd still be hands off at this current point in time. But we know we'd be looking for downside overall, okay? But again, this pair's not as clean as some of the others you've seen. Where has it gone? With, say, GU. Okay, so GU so far out of all the pairs is looking the best. So that's typically how I break down sort of the US dollar pairs. Now, sometimes I'll be doing this breakdown in my community. If you want to join, the link is below. It's a nice, tight-knit, you know, clear, concise, no massive Discord. It's very tight-knit. And yeah, you'll learn a lot, I promise. But when I do this, sometimes you've got everything beautifully in sync, and those are optimal trading conditions. But sometimes you won't, and you can see on certain pairs the 4 hours not quite in sync, or the weekly's not quite in sync. And that means hands off. Certain US dollar pairs would be optimal, and those are the pairs we bias and choose for that week, pending entry criteria, of course. So it's all about decision making. We're not looking to trade multiple US dollar pairs in the same week. We're looking to catch maybe one position, 2 positions max. You know, because with our minimum risk to reward of a 1 to 3, even if it's 1 win and 1 loss, we're going to be profitable just taking 2 trades typically. So that's how I break it down. And that same process I use on the JPY basket for the yen pairs, and on the BIXI, the British Pound Index, for the pound pairs as well. So I really hope that helps, and I hope you found that incredibly useful. And again, if you want these type of breakdowns to your community twice a week, sometimes even 3 times a week I do at the moment, then click the link below. It'd be awesome to have you in there. I always reach max capacity at 60 people. So if you want to join, do not hang around. But other than that, guys, thank you for watching. See you on the next video. Take care.